Hey guys, good afternoon, everybody. Today is Monday, October 30th. It is 2:01 right now. Our scheduled mentoring session is for 2 o'clock. So I'm going to go ahead and set up this room real quick, and then we'll get started shortly with our session for today. So if you guys have any questions, feel free to put them in the chat. Otherwise, I guess main topics for the day would be really covering the main strategies that we're applying. So that would be the momentum pullback scalp strategy, 1 minute high low scalp V2, and the actually let me see. We'll do the momentum pullback scalp strategy, and we'll also cover the new momentum pullback scalp indicator, and then we'll go over a high low scalp V2. So yeah, other than that, guys, if you guys have any other questions, feel free to put them in the chat. Otherwise, I'm going to finish setting this up, and then we'll get started shortly. That looks good here. All right, looks like we are good to go. Let me get this link sent out to you guys here in the premium. Let's see, where's the mentoring session? We haven't put this up in a while. There we go. All right, so I'll get a few moments for people to make their way in, and we'll get started shortly. All right, so I'll just put this up over here real quick. Main topics for today. Entering session. So we'll be covering the momentum pullback scalp strategy, momentum pullback scalp indicator, and the high low scalp V2 strategy. So those are our main topics for the day, guys. If there's anything else that you guys want me to cover, feel free to put them in the chat. We'll pretty much go in depth with these topics for the day. There's not really too much to cover. We haven't changed anything in a long time. There's just a couple additions that we've made, including the new indicator that I put out for you guys, mainly for everyone's convenience, because they make it so much easier to look at the levels if you have the indicator on your chart. So yeah, if there's any questions that you guys have, feel free to put them in, and then we'll take a look. Gotcha. Yeah. And then Maddie also mentioned, discuss like sideways markets versus trending markets. We'll take a look at that too. So here, sideways markets versus trending markets. So just looking at, so we did have a sideways market earlier today, earlier in the session, and then it picked back up like around like 10 o'clock. So a couple hours later, it picked up, and then we had more of a directional push. So yeah, we'll touch on that too, like towards the end. It's a pretty broad subject, so we'll cover it just so that you guys have an idea of like, what that looks like, but it'll definitely help. Yeah, exactly. Maddie said, looks like the lead up to Wednesday drop is looking good. Yeah, I agree, Maddie. Let's see. Williams asking, Sean, we don't have a Google sheet for the momentum pullback scalp, correct? Yeah, so I don't have the problem with that is that there's too many entries that come up for the momentum pullback scalp. So I don't have a spreadsheet for that. The thing with that strategy is that we already have tested it for months so that we understand that it does work. So I don't have a spreadsheet for that. The only times I document that trade is when we take them during the official trades. So there is there is no Google sheet for that one specifically. There's just too many entries. Like if you look at the entries for the momentum pullback scalp, the problem with that too is that a lot of them, the entries will come up at times where they're not, where price isn't really stable. Like a lot of them come up in the beginning or they come up pre-market and stuff. And it's not something that is, that's more concrete. Like say like the breakout V2, it comes up once a day, or the momentum counter scalp comes up once a day. Those are easier to identify when they just come up once versus multiple times. Let's see. Maria's asking, Sean, is it possible to change the lines of the new indicator? So we don't have that option right now, but I can probably look into it. I don't think it's something that we can change because it unless it's something that's like agreed upon amongst everybody in the group, then it's not something that you can necessarily change because it's not something that you can have in the settings, right? Kind of similar to like the sessions, like everything here is dotted. Like we can't change them from dotted to like flat. Maria's asked, she's mentioned that they're very dark. I think that was the point. That was the whole point that we had them very dark because you want to know where the levels are, right? Because if they're not dark enough, then they're gonna blend in with the grid behind because there's lines on the chart already from the current grid. So that's the whole point of having them dark like that, Maria, so that they can stand out. But if that's something that you want, I don't think we can do that where we can change the type of of lines, or we can maybe change the color slightly. The only problem with that is that it has, because the whole point of the indicator was to keep them dark. But we'll put a poll. I'll put a poll up. So we'll ask majority of the people because I think a lot of people actually want them dark. But if you want them a little lighter, I don't know if it's going to be possible if majority of people want to keep them dark. So yeah, Maddie said if you don't like the indicator, you can also darken the lines. Yeah, if you want to do it that way too, Maria, there's another way to do it. It's not using the indicator though. It's actually just restructuring your chart. So if you want to just do it where you want to just have the numbers kind of spread out, what you would do here is you would just you would drag your chart right here, right at 10. So for example, right here, see how it's at 10s now? It's at 33.50, 33.40. Once you have it dragged to that, you can always go to your settings, and then you can go to your where is it at? Sorry, I forgot. Okay, so if you go to your canvas right here, you can go to your lines right here where it says horizontal, and you can just change the color yourself. So if you want them lighter, you can do that if you want. This is probably a better option for you, Maria, because I think if you're the only person that needs it, that'd be the easier option. You just drag this where it's only at 10s, and then you go to your settings, which is it's not difficult. It's like, it's decent. So if you want to have it a little lighter, you probably change this to 30. 30 might be a little too dark for you. So maybe like 20. And then you can have your vertical lines right there in like gray instead of completely black. So I think that'd probably be your best option. But we can put a poll in the group if that's like a big deal, and then we can ask to see if people want it. But I think everyone who has been using it they actually like it very dark. So let me just put this back to my default setting 6, and we'll go from there. Hey Valentine, how's it going? Yeah, definitely. Good afternoon. All right, so I think that's it for these other questions. If there's any questions that you guys have, guys, feel free to put them in the chat. Again, these are going to be our main topics for the day. We're going to be covering the momentum pullback scalp strategy. Majority of you guys already know this strategy, but I'm going to be using it in conjunction with the new indicator, where it'll pretty much draw the lines up for you. So if there's any other questions, guys, feel free to pop in. I'm here to help you guys out. This session is pretty much for you guys. I don't necessarily need to have these sessions, but I'm doing this because I want to help you guys out, make sure that you guys understand everything that is going on here. So we'll start off by looking at an example of the momentum pullback scalp. And we can probably take a look at this right here. So I'll just go back right here at 10 o'clock. This is the earliest, or I mean, there's even more right here, like around 11:30. Let's just go back to like 10 o'clock. I just want to show you guys, or let's go to the closest one. So the closest one I can see over here is around this time at 11. So what I'll do here is I will go to this specific candle. And I will put up the criteria for the momentum pullback scalp. So pull it up right here. Here are the criteria for the momentum pullback scalp strategy. So first, you want to identify the direction of momentum using the momentum indicator. You can see over here these horizontal, these vertical lines that go up and down, or these vertical bars that go up and down, red and green. These are going to be the momentum signals. So let me just turn off all the indicators here so that you guys understand what indicator represents what. So this is typically what a clean chart looks like. When you turn on the momentum indicator, you're going to have these vertical lines. These vertical lines are going to indicate the direction of momentum. So you get a red signal over here with the red candle. This is going to indicate that momentum is going downwards. Vice versa, you get a green candle with the green momentum signal. Momentum is going upwards, right? So pretty self-explanatory there. Step 1 is going to require that you identify the direction of momentum using the momentum indicator. So for example, right here, you can see that we have a bullish momentum. It doesn't require that it has a green candle within it, but you just want to make sure that momentum is pointing in the direction of your trade. So right here, we have a green momentum. This is going to indicate that momentum is bullish. So you can see prices pushing up right here. That's going to be step 1. Step 2, you want to confirm the trend is matching the direction using the pivots indicator. So by turning the pivots on right here, in order to confirm whether price is bullish or bearish, you want to confirm whether price is above the pivots or below the pivots. You also want to confirm that the level 4 pivot, which is the red one right here, is either below all the pivots or above. So if price is above the pivots and the red pivot is below all the other pivots, this is going to indicate that price is bullish. Vice versa, if price is below the pivots and the red pivot is above all the other ones, these are going to confirm that price is bearish. So with that said, for this example over here, you can see that price is above the pivots, the red pivot's below all the other pivots. This is going to confirm that we're in a bullish trend. So once you confirm step 1 and 2, you can move down to step 3. Step 3 is going to confirm trend is matching the direction using the trend meter. So now we're going to add the trend meter to the chart. Down below over here, you can see the trend meter. Whenever the trend meter is green, this means price is bullish. Whenever the trend meter is blue, this means price is neutral. And whenever the trend meter down below is red, this is going to indicate that price is bearish. So with that said, for step 3, you want to confirm that the trend is matching with the trend meter with regard to the pivots and momentum. We have bullish momentum here with the green momentum signal, and we have a bullish trend here with the red pivot below all the other pivots with price above it. Once you confirm that, you want to confirm a directional push in that direction. We're looking for a bullish push here. You can see this green candle is pushing to the upside. That's going to be step 4. Step 5, you want to confirm that price pulls back in the opposite direction. So moving forward here, we have price push up, and now we have a red candle right here, right? This is going to be step 5. We have the pullback right there with the red candle. And for step 6, you want to confirm that the pullback does not close past the momentum signal. The momentum signal is right here at this specific line. So this is going to indicate that this right here is going to be step 6. The pullback doesn't close past it. It closes right at it, but not exactly past it. For step 7, you want to enter at the nearest whole number, ending at 10, 10, 20, 30, 40, etc. So to do that, you're going to turn on the momentum pullback scalp indicator. Default settings is 510. So for this here, if you want 5 levels, which is how I like it, because I want to see where the levels are ranging between both sides, I set it at 5. If you want more lines, you can set it to 10. And now you have more lines on the chart, right? It's just up to preference. If you just want 2 lines, you set it to 2. And now you got 4 lines on the chart. So you don't have like so many lines all over the chart. It's just up to your preference. For me personally, I think 5 is a good middle number because it's going to cover 5 levels above and 5 levels below. Once you have that right there, you can leave it at default at 10 because if you want, obviously you want to know the levels at the 10 mark, right? If you want anything higher, you can change it to 25, but that's not going to meet your criteria. We're looking at the closest whole number of 10s. So we have this right here. Looking at this example right here, let me zoom in a little bit. So looking at this example right here, you can see that this candle pulled below this level, but unfortunately this level down here is not going to meet criteria because now if price pulls below that point, it's going to be past the momentum signal, right? So this example doesn't work. We got to move to the next one. We need price to push it back up. You can see price pushes up right there. It pulls back. Now that it's pulled back right here, your entry is going to be at this 10 mark, which is 33,010. We're going to have a buy signal waiting or buy entry waiting right here, pending buy limit. Once you have that, TP stop loss is set to 125. And once you have that set up right there, you're just waiting for price to pull back, fill your order, and go straight to your TP. And that's exactly what happens right here. So if you guys look at this candle right here, let me zoom in a little bit. All right, so price pulled back to this area. Your pending order would have waited right here at 33,010. As soon as this would have filled, it would have came down, filled your order, and went straight to your TP. So there goes an example of a momentum pullback scalp entry using the momentum pullback scalp levels indicator. Let me show you guys another example over here. Let's just go back to this momentum signal. All right, we're looking for the same thing here again. So we got a momentum signal right here for a buy. We got price pushing up. Retracement right here. At this point, same thing, right? We have bullish momentum. The only thing that we don't have here is we don't have bullish trend. So actually we can't have an entry here just yet. We need to have a confirmation of bullish trend. Okay, so right here, now we do have the bullish trend. We have bullish momentum, bullish trend with the trend meter, bullish trend with the pivots. Now we just need to look for the retracement. All right, price retraces right here. This level is going to be entry point. So at 32,870, this is where your entry point is going to happen, right there. Same thing again right here. You have your TP stop loss set up, 1025. Now you're just waiting for price to come back down further, fill your entry, push back up, and hit TP. At this point here, price pulls back, fills your order, go straight to TP right there. So that's pretty much it. All right, guys, if there's any questions, feel free to put them in the chat. If there's any questions regarding the indicator, you guys can see it's pretty self-explanatory. You don't even have to do anything. You just need to put it on your chart. If you don't want to use it, you don't have to. You can put it up manually. That's what we were doing for the longest time. But I realized that it'd be a lot easier for us to just put, have them automatically plotted because it pretty much does everything for you. And then at that point, you're not going to misplot the levels. So let me scroll up real quick. Maria's asking, and pivot 4 below the rest of the pivots, correct? Yeah, that's how you could confirm the trend. So that's why no entry happened over here, but the entry happened over here because at this point, the trend was not confirmed. So after this candle right here, then you can start looking for entries. You couldn't look for anything back here because there's no trend, but at this point, there was trend. Let's see. Maria's asking, and the level must be above the momentum signal. Yep, that's correct, Maria. So the momentum signal is right here. Basically, you could find any entries above this line, above this blue line. That's where you would need to look for entries. If anything came down here, then there would be no entry, because then it would invalidate the criteria for step number 6, right there. Yeah, they're super important. That's why I think this strategy has the most criteria, but it's a very good strategy if you line it up properly, because there's so many confirmations here. You're looking for so many confluences that it makes it really difficult to really mess it up, right? The only time it really messes up is if like price is ranging or if there's something going on in the market. But for the most part, if you confirm all of the details here, odds of your trade hitting are very likely because you confirm trend, you confirm momentum, you've confirmed trend on multiple confluences, not just like the pivots. It's not just the trend meter. It's on multiple confluences. So I agree. The details are very, very important. But once you actually get it down and it just becomes mechanical for you, you'll be able to apply this very easily. Valentine's asking if this is our main strategy. Yeah, this is one of the official strategies. It's this one and the High Low Scalp V2. But this is like the one that we've been applying for the past, I think, 4 or 5 months now. This has been like one of the main strategies that it's a staple for us. This strategy works pretty much in all markets, market conditions, because typically it usually, like you have to confirm so many things. So you're not going to be trading the strategy when like the market's ranging, right? You're typically going to be trading it when the market's actually moving. So it kind of works through all types of market conditions. Yeah, no problem, Valentine. Let's see. Nick's asking, my trend meter is only showing blue at default. Is there something I must change? Yeah, Nick. So for your trend meter down below, the default settings are going to be intraday settings. So if you reset to default, it's going to say 30-minute, 1 hour, 2 hour, and 4 hour. That's why it looks blue down there, because this time frame is so far out with regard to the 1 minute. So to set it to the 1 minute time frame, just go over here and click on the settings and change it to chart. Once you change it to chart, click OK. And once you click OK, it's going to show you the trend for this specific time frame. So if you're on the 1 minute, it's going to show you the 1 minute trend. If you're on the 5 minute, it's going to show you the 5 minute trend. If you're on the 10 minute trend, 1 hour, 1 hour trend, etc. So that's what you would change there, Nick, to have it set to that specific, specific time frame, especially if you're trading on the 1 minute. Vimal is asking, how many times do we take the momentum pullback scalp and up to what time? So for me personally, I only apply it in the morning because I'm only trading from 6:30 to 8. But if you look over here, there's a lot of entry that you can take. So if you want to trade after the live session, which a lot of people do, it's really up to your preference. If you want to trade it after, you can. I don't really recommend it because, I mean, unless you know how to read the market and you understand how it's moving, it's going to be difficult for you to trade outside the live session, right? Because during the live, I'm giving you guys full analysis, so you guys understand exactly how how everything works and stuff. But if you're trading on your own, you can do it. Like you can see these examples that I showed you guys. This happened at 10. This happened at 11. I think the cutoff would be around 12, because this is when the market starts to kind of go flat, and you can see right here it's going sideways. So if you do want to trade it outside the live session, you would only trade it when the market's volatile. So of course, volatility is going to happen between 6:30 and 12, basically, because that's New York session. I only trade between 6:30 and 8 because that's typically just my trading time. I've noticed, well, not just noticed, I've documented where majority of my losses happen outside of this time period. So for me personally, I trade between this period, but if you want to trade outside, you can. You're more than welcome to. You just got to make sure that you're actually following the details and you're actually following it as it's supposed to be applied. Lamal said 12 time zone is Pacific time. So 12 Pacific Standard Time or daylight savings. I don't know if it's, so here in the US, we actually voted to not have daylight savings anymore. So I'm not sure like the difference between the time, but it's just Pacific time. That's usually like, yeah, I know. I just found out about that recently too. So I think this is the last year we're doing daylight savings. And then next year they passed legislation where we're not doing daylight savings in California anymore. So Pacific time, basically, we're going to be removing daylight savings. I don't know how it's going to work. It's going to be kind of weird because it's going to be super dark out like all day now. It's not going to be like in the summer where it's like super bright even at 8 p.m. It's going to be dark like winter all year round. Yeah, exactly. The mall said, when is UK going to follow? Yeah, no, I agree too. It just makes sense because we're doing daylight savings, but it kind of messes with the time. Like, for example, for trading and like I thought the time changed this week, but it actually changes next week. So I was kind of thrown off by daylight savings too, but we'll see. Yeah, no problem. But yeah, that's New York session. So basically New York session is pre-market is 5:30. So if you want to trade even before that, I've seen other people who trade pre-market. I don't really recommend it because it's usually okay like the first 30 minutes, and then as it gets closer to market open, you can see right here, you guys can see the huge spike in candles, right? So some people trade pre-market. I've traded pre-market sometimes, and I've just realized that it's really a toss-up. It's super risky, and you're not really going to know for sure if you're going to get these random spikes that happen as you get closer to market open with all the manipulation. But yeah, if you want to trade New York session, basically 5:30 to 6:30, and then that's going to be pre-market. Then the actual session is from 6:30 up until about 2 o'clock. So you can see over here from the chart, see how this candle is frozen? It's because the market closed about 27 minutes ago. So the market technically runs for an extra 2 hours, but you can see over here, you start to get the mid-market reversal. 12 o'clock is usually the consolidation phase, and then market starts to reverse. Gotcha, no problem, all. All right, so let's see what other questions I have here. Maria's asking later, can we check the triple confluence? Is it different from the pivot scalp? So, okay, Maria, let me go back to your question. So you're asking if the triple confluence is different from the pivot scalp, right? Sorry, I'm trying to figure out if you're comparing it to the momentum pullback scalp, or if this is a totally different question. Okay. Yeah, well, so we'll go over that after. So we got our list of things here, and then we'll add that to the end of the list. But yes, the short answer to your question is yes, they are different. They're different because triple confluence is 3 different strategies versus the pivot scalp, which is just one strategy. So I'll add that in over here. Compare triple confluence versus pivot scalp. I mean, and another add to that is the main difference is that the triple confluence includes the high-low scalp. So that's another thing. The high-low scalp is completely different from the pivot scalp. All of the strategies here are based off trends. So just a reminder, guys, all the strategies that we trade here, for the most part, they're all based off momentum and trend. So a lot of the strategies look the same, but they're different. Some of them are based just off the momentum signal. The high-low scalp requires that it breaks and close past structure. So they're slightly different, but they all kind of, and I'll add that to there too. And Maria also wants to see versus intraday scalping. Yeah, and again, this is the reason why I always tell people not to confuse the strategies, because they're very similar, but there's small things that are different between them. So, and we'll go over that a little later once we go over some examples for that. So other than that, yeah, definitely, Maria, we'll cover that, and I'll scroll back up and see if there's any other questions here. Let's see. Yeah, Maddie said the sweet spot is 6:30 to 8, 10:30 split is sweet spot as well. Maddie said big thank you to Sean for testing over the years and establishing which times and CP stop loss levels are best. Yeah, I mean, it definitely, if you guys have been with me for a while, I've been trading live for over 5 years now, but I've been trading in total for over 10 years. So a lot of this stuff that we're using now, it's all from a lot of the testing that I've done over the past 10 years. So from all my testing, I figured out, what's the best TP stop loss for this specific asset, and, which levels and things to use like that. It just gets better. Over the time, market's always changing, but since I've been trading US 30 so much for the past, 5 to 10 years, I'm able to adapt with the market. So for example, right now we're in a ranging market, and it's not super difficult for me to adapt with it. So you can see over here how the market was kind of moving a bit unusual, but not a super big problem for us because we've seen this before and we're able to make adjustments to cater to what the market's given us. So let's see. All right, Valentine's asking, was just wondering what percentage do you recommend to risk? I mean, it kind of depends on you, Valentine. I mean, for me personally, when I trade, I'm usually risking about like 1.5 to 2% per trade. So I'm not really risking a lot. If you're trading a personal account, obviously you can risk more. Like if I was just trading my personal account, I would probably be risking 5% per trade because I'm not going to have that daily drawdown limit, right? I can take a trade and I know my win-loss ratio and I know my probabilities. So I can just keep taking 5% trades and eventually I'm going to be in profit, by the end of the week. If you're doing with a prop firm, obviously you can't risk that much because you hit 5% and you're done. So if you're doing a prop firm, you want to keep it low, like below 2%, 2.5 at max. If you're doing a personal account, it's just up to preference too. Because if you're doing a personal account, like say for example, you're doing a personal account and your account is like $10,000, right? You're not gonna make a lot of money if you're risking low risk. If you're on a prop firm, it's different because you can risk more and you can make more. But it just depends on the type of account that you're using, and then also the capital that you have to trade with. Because like if I had $100,000 in a personal account, I'm not going to risk 5%. That's a lot of money, right? Like you should do the math, guys. 5% of on a 100K account is 5K, right? 5,000. So you do 100,000 times 5%, right? You're going to risk 5,000. I'm not going to risk 5,000 per trade on a personal account. I would do less. So it's just up to preference. But again, it's if you could give me some more details, Valentine, I can let you know. But just the general response to that would be 2.5% max per trade. And I think that's good. That's good for, you're probably not going to make a lot of profit if you're on a small account, but it's going to teach you discipline to stick to that risk so that your risk management stays on point, your trade psychology doesn't get all screwed up, and you'll just continue to build off that. Valentine said, just meant in general on a prop firm. Well, I mean, if you want to do what I'm doing, I mean, it's up to you. If you're trying to YOLO your account and you're trying to blow your account by tomorrow, then take bigger risk, right? But if you're doing a 2.2% risk per day and you don't really lose very often, because a lot of these strategies are like basically 1-to-1 now. So the win-loss ratio is very high. Well, the win ratio is pretty high. And if you're doing a 2% risk, you're not going to blow your account and you're not going to reach to the point where you violate the criteria, right? So yeah, if you're doing it on a prop firm, you're probably not, you're not going to want to go past 3 or 4% per day. So again, it just depends on you, Valentine, because I think you posted your trades before. You take a lot more trades than me. So if you're taking like 5 or 10 trades, you're not going to do 2%, right? You're going to do something less. For me, I'm taking 1 or 2 trades a day, so I can do 2% because if I lose 1 trade, I'm still fine. But you can't take 10 trades at 2% because if you lose 2 trades, you're already at your daily loss limit. So it's got to give me a little more details, Valentine. So everybody's different, but in general, your max risk should be 3% for the day. Okay. So I'm just Valentine he just like now he went from like prop firm to personal account. So again, it's still not gonna make sense because you gotta give me like details, bro, because I can't give you a response if you're telling me first prop firm and then personal account, and I don't know how much money you have, and I don't know how much money you're willing to lose. Just like this question could go in so many different ways. But okay, just general response to you is going to be 2% risk per day. Valentine, that's what you should do. I mean, it should have been that way from the beginning. Like even before you own a prop firm and you're doing a personal account, you should always be below 5% risk. I think the prop firm is good because it kind of forces you to stay below 5%. If you're on a personal account, it's going to, like I mentioned earlier, you can risk more, but you can also lose more. So yeah, so Valentine said he usually risks 1.5%. That's fine. it doesn't matter how much you risk. It matters how much you limit yourself at, right? You can always risk more, but if you're risking 1.5, that's fine. Yeah, no, you're fine, Valentine. It just depends because like for me, for example, I'm a different type of trader. For me, I'm very conservative. So like I could risk more because I'm only taking like one or two trades. If I ever lose a trade today, like if you look at my results, um, if I lose one trade, I'm done for the day, right? For you, for you or for other people in the group, they're not able to stop at one trade. Like if they lose one trade, they're going to revenge trade a second time. So if you're a revenge trader or you're an over trader where you can't really control yourself, like you don't have self control over your trading, then 1.5 is actually really good. Because if you're doing a 1.5% risk, you can lose like three trades back to back and you're still fine. For me personally, I can risk 4% if I want per trade, because if I lose one trade, I'm done for the day. And then I'll make it back on the next trade, right? So it just depends on the person. But yeah, for you, Valentine, because I've seen your trades, you take more than one trade. You should probably stick to 1.5, because then it's giving you some cushion. So if you take a loss and then you revenge trade, you're still at 3% risk, right? So you're fine. You're not going to blow your account, or you're not going to violate the criteria. So yeah, I mean, it depends on the person. I know you, Valentine, so like for me, it works because we can talk about this. But if like a random person was to ask me like, hey, what risk should I use? I would tell them to use like the bare minimum. But I know your trading style and you like to take like a couple trades a day. So I think 1.5 is good for you. You're on the right track. Just stick to that. And then later on in the future, if you decide to, kind of hone in and just focus on quality trades, like one or two trades like myself, then you could go up to 3%. Because then you're technically doing like two trades in one. So instead of taking, three trades, you're basically just taking one. And that's where your risk goes into. So, all right, Valentine, no problem with that. But you're definitely on the right track. Let me scroll up real quick. Yeah, no problem, Valentine. Next question was from William. So William said that he would like the option to change to a solid line. So I think it is a solid line, isn't it? So let me turn it on real quick. Oh, so this is dashed. Wait, that's weird. Why does it show dashed? I swear, like on the other chart, I turned it on and it was solid. I swear it was solid earlier. I don't know. Am I seeing things? I might be. Let me see if I can refresh this. Because I swear when I was looking at it earlier, it was solid, but like I thought when we were looking at it with Maria, it was solid earlier. But I could be wrong. Let me see. Let me just refresh it. I guess it is dotted. I don't know. I guess I just saw it totally different. I swear, like earlier when I was looking at it, it looked like it was solid to me because that's what I was responding to Maria earlier. Let me change it to a different. Okay, never mind. It is dotted. Yeah, see, so Nick said this morning it was solid for sure. I don't know like what happened with it. Comments on like what he wants to be changed with the indicator. So William over here wants the option to change the solid. So again, we can't do that, William. It's not possible because you'd have to set it like to one thing. So we'd have to set up a poll in the group, and then we'll have to have everybody vote on whether they want it to be a certain type of line or if they want, because like these indicators, I can change them, but I don't think I can change it to where there's an option because it's gonna cause trouble with like the chart. Because like first, like I know not everybody here has like a super old computer, but some people have old computers and they like when you change the setting like that, it kind of lags on people's computer. So like having options like that could like really mess up the indicator. So I can't do that right now, but we can do a poll if it's really a big deal to you. I think the biggest thing, if it's a really big deal to you, you can just do what we mentioned with Maria. Because I think it's probably easier for you to do this if than to have like because it's so simple to do. Like for example here, this is when the chart's kind of spread out. What you would do is you would just pull this down, the scale right here, to where it's adjusted, where it's at every 10 mark. So for example, right here, see how it's at 31, 150, 34, 31, 140, and everything is at 10 mark here. You would just slide that down, go to your settings, go to your vertical horizontal lines right here, and then change this to, wait a minute. I think something happened to my chart, guys, because I swear this thing like here was different too. It was not at 100% earlier. It was at like 3%. Yeah, sorry guys. All my charts are kind of like, for whatever reason, they keep changing. So on this main chart over here, sorry guys, I'm just so confused because I don't know why this chart's different than this one, but the colors here are, yeah, I don't know what happened with, I think because my chart settings were slightly different, or maybe I messed with it when I was showing people examples before. But anyways, William, this is probably going to be the easiest way for you to do it. You would just have to slide this down. And this is only if it's a really big deal. I don't think it's a really big deal to you, but I'm pretty sure if it's a big deal, like this would be your easiest solution to make changes without having us to change the entire indicator. Because we have to take a vote, and I'm pretty sure majority of people are not going to vote to have those changes on because a lot of people like it as is how it is already. So we'll keep that in mind. We'll put a poll up and we'll have people vote. If more people vote for like changes that you want, we can make those changes. But if not, then we have to keep them as is. Because I think right now, the general consensus is that this works for everybody here. But if you want to make changes, just pull this right here and then go to your chart settings, and then you can change the color right here. So if you want it to be dotted, actually, I don't even know if you can change it to dotted. If you want it to be, because you want it where it's solid. If you want it solid, it's already solid. And you would just change this right here from like 6 to like say 30. And then you'll have the lines there. And it's going to be like a light gray. If you want it to have it super dark, you just go to your settings again here and then change this to like 100. And now it's super dark. And then from there, you can make your adjustments. I mean, even if you want it as a different color, if you don't want it black and you want it, I don't know, blue or something, you can do that too if you want. But you know, you have all these settings here that you can change. It's just when you mess with an indicator, it just kind of makes things a little difficult because it's not something where you can just easily make adjustments. Like you want this certain color and stuff. I'd have to actually go into the code and actually do the code. And I'm not even a coder. So if I do that and I mess it up, it's going to mess up the entire code and it's just going to destroy the entire indicator. So we'll have to take a vote on that, William. I'll just reach out to me. If that's a really big deal, just reach out to me because we already have you and Maria that kind of want that as an option. So we'll just take a vote. But if you guys really, really want that, if that's like a game changer for you, then let me know. And then we can put up a poll. I think it's just going to cause argument in the group if there's only like certain people who want it and some certain people that don't. All right. So yeah, other than that, guys, let me see what else we've got over here. Let me scroll up real quick. Sorry, we got Kodi over here. He's ready for his walk. Long bite. I'm gonna finish this live session. All right, long bite. No, can I go down? Right here. Right here. Most of you guys know Kodi. This is Kodi from Kodi Kai Trades. All right, so we got Maria over here. She's asking, all right, so they're just discussing the indicator changes over here. Over here real quick. All right, question from Vimal. Vimal is asking another question for a newbie like me. How would you recommend I start? I have some knowledge of trading, have traded in the past, but I'm back looking at this very seriously now. Understand the prop firm challenge will take a month or two to pass. So we start personal account to test, then move to prop firm. So it's up to preference, Vimal. So I mean, it's just really up to you. If you're profitable, so I wouldn't recommend doing the prop firm unless you're profitable. So if you're not profitable yet, you can't reach 10% within a month. Well, it's not even a month. It's like for as long as it takes. If you can't be profitable to reach 10%, then I would recommend sticking to either one, a demo account, or two, well, there's a couple options. So one demo account, two, a very low risk account. So like whatever, like chump change, right? Like if you can put $100 into account and then do penny trades, then you could do that as long as it's not going to affect you. Or third option is to do a trial for one of the funding companies like FTMO. So I wouldn't really recommend putting a lot of money at risk. I mean, just risk as much as you would be okay with losing. Like, for example, if you lost that money tomorrow, or if you just like suddenly lost it for whatever reason, like that wouldn't affect you. So first option is trade demo until you're able to reach 10% consistently. Second option is to use a personal account, but use a small amount and just take penny trades, like 0.01 lot sizes. That's going to be like a few pennies per trade. Or do a trial account with one of the funding companies. I think the biggest problem with a lot of people is they want to jump into it right away before they're actually profitable. And what happens is they either put a lot of money into an account and then they blow it, and then they get discouraged and they don't want to trade anymore. Or two, they keep buying into these funding companies and they just keep blowing accounts, right? So I'm just looking out for your best interest. Again, it's up to you. If you feel comfortable and you think that you can pass the challenge right away, then go for it. But if that's not the case and you're still kind of rusty and you're not like 100%, then I would recommend either trading on a demo and then just or even doing the trial. I think the trial would probably be a better option for you, because if you trade on like a trial FTMO, you can pass the trial, and then once you pass like two of those, then you'll know for sure that you're ready for the actual challenge. So for me personally, I think funding companies they're a good vehicle to fund your prop account. So like if you look at my accounts over here for my profits, so I have about, let's see, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have about 10 accounts here. And then I have one of them is my personal account, this one down here, right? So I have about 10,000 in this account. I probably make about 1,000 a week on this account, taking X amount of trades, and then I make a withdrawal of 1,000 every month just to make sure that this personal account is fine. Everything else is a prop account, and basically when I make money on these accounts, I just deposit it back into my personal account. I'll make withdrawals just to see if the personal account, that broker, is fine. I've been using Hero FX, so I've been making withdrawals every week, about $1,000. They've been fast. I get my withdrawals within a couple hours, so they're trustworthy for me at the moment. And then once I truly trust them, then I'll put more money in the account and I'll take more risk. So yeah, I think a prop firm is a good vehicle to like make money to put into your personal account. I probably wouldn't just risk your personal account, because the thing when you're trading with prop firms is that it's basically free money. Once you get funded and you get your refund back, then it's free money at that point. There's no risk on your end. So it's just up to preference. But yeah, I think that's probably your best option. Let's see, other than that. All right, I think that's it for the additional questions. If there's more questions that you guys have, feel free to put them in the chat. Otherwise, we're going to scroll down to the next topic for the day, which is the high-low scalp V2 strategy. So I'm going to go over here to the other chart. And we will take a look at the high-low scalp V2. So let me see if there's any entries here that came up just from like, I'm just going to eyeball the chart to see if there's anything here that I can see. All right, so there's one right here. The entry came up around the same time as the momentum pullback scalp that we saw a while ago. And for this here, we are going to be covering the high-low scalp V2. Okay, so here's the criteria for the high-low scalp V2. I haven't created an official video for this because we're still testing it. But I think by this week, I'll probably create an official video for this because I think the settings that we have currently right now they're pretty solid. So I don't think there's much changes that need to happen. But if there are changes, obviously I'll make a new video. But I think as of now, the strategy is perfectly fine as is. So let's start off with step one. So step one, you want to confirm the trend using the pivots. So as we discussed earlier with the momentum pullback scalp, in order to confirm the trend, you want to make sure that price is either above or below the pivots, and you want to make sure that level 4 of the pivots is below all the other pivots. So for example, here, price is above the pivots. The level 4 pivot, which is red pivot right here, is below all the other pivots. So this is going to confirm that we're in a bullish trend. Vice versa, if you want to look at the opposite, you can look over here where price is below the pivots. The red pivot is above all the other ones. This is going to confirm that price is bearish. So that's an example of bearish bias. This is an example of bullish bias. Price is above, red pivot's below. So going to this example over here, for this trade or for this specific setup, you can see that we're currently in a bullish trend, right? So if we're in a bullish trend, we're only going to be looking for buys. Once you've confirmed that, you're going to move on to step two. Step two, confirm price break and close past the nearest high low in the direction of the trend. So we know that trend here is bullish, right? So we're looking for price break and close past a high low to the upside. This candle right here, let me zoom in a little bit. This candle right here breaks and closes past the high low, right? That's going to be step two. For step three, you want to confirm that price fakes out at the same high low within the first 5 candles. So this candle broke and closed past it. You're now looking for a candle within the next 5 candles to pull back below this zone or below this level right here. So going forward, you can see that we have that set up right here, right? So first step, confirm trend, it's bullish. Second step, confirm price break and close past the high low. This candle broke past it. Step 3, confirm the fake out, price fake out right there. Step 4, set a pending entry in the direction of the trend. So right here, now you're going to set your pending order right there. And you're going to set your TP stop loss to 30.30. Once you have that set up right there, you're pretty much just going to wait for price to come back up, fill your order, and go straight to your TP. So with that said, we let the trade run. The trade is now filled. You can see how price pushes up. The trade is now active. You can see it go sideways for a little bit, but eventually it breaks through and goes straight to TP. So there goes an example of the high-low scalp V2. I think Valentin, you're still here. This is the second strategy that we use as our official strategy, Valentin. So we apply the momentum pullback scalp during the live sessions, and we also apply this strategy, which is the high-low scalp V2. So there's basically 2 strategies that we look at throughout the day of our live sessions, and these are the 2 main ones. There's 2 other strategies that we're currently testing, which is the breakout V2 and the momentum counter scalp. But for the most part, this here is one of the main strategies that we're applying. Let's see, Vimal said, what is the success rate of the high-low scalp V2? Sure. So glad that you asked. So if you ever want to see what the success rate is for this specific strategy, you can go to the Discord. I'm not sure if you're familiar with it, Vimal. I know you're new to the group. So if you want to look it up, just go over here to the trading journal. You'll go to the high-low scalp V2, click on this spreadsheet right here. This spreadsheet will come up right over here. This is for the High Low Scalp V2. Let's just go and update this real quick. Make sure the numbers are correct. Numbers are not correct. So we've been taking the strategy live, like on these live sessions every morning since October 5th. So from October 5th up until October 27th, basically a full month of trading, we've had 14 wins and 5 losses, total profit of 2,700 pips, total trades of 19 trades, total win-loss ratio of 73.68% win-loss ratio. This is a 1-to-1 strategy, so anything above 50% is good, right? There's going to be some times when we don't take a trade, but this is recording every entry that comes up. So I haven't taken all these trades. Actually, a lot of these losses right here, I didn't even take these. So if you look at my official trades over here, I've only taken 1 loss. So I've been pretty good at avoiding the losing trades. I've pretty much taken majority of the wins. The only loss I took here was on October 23rd. But if you were to calculate every single entry that came up, these are, pretty much the days that they came up. So if you were to take every single trade, it'd be at about 74% win rate. For me, if you were to be careful, like for me, for example, I took a couple trades here, but I also missed a lot of other trades too. There was a couple more wins. So I could have had more wins here, but being a conservative trader, I actually avoided a couple of these trades here because there was 19 trades here. For me, I've only taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah. 12 actually. So I took 12 out of the 19 trades. All that I've only lost 1. So, I mean, it depends on the person. So like, if you're like me and you like to be very careful, then you're going to take less trades, but you're going to have a higher, win-loss ratio. But if you were to just take every trade and not really, don't even like think twice, you'd have way more wins. So it just kind of depends on yourself as a trader. So it just kind of depends. But yeah, that's the win-loss ratio if you took every single trade, 73%, which is really good for a 1-to-1. Anything above 50%, you're going to be in profit at the end of the week, end of the month, end of the year, So yeah, again, we have to keep testing this. So it's only been a month since I've been applying this strategy. We're going to do it all through November. We're going to do it all through December. We're going to do it all until next year. And then we're going to have this data. So on our spreadsheet over here, we'll know exactly what strategy to apply when it comes that time of the year. So I know for sure next year, when I'm trading in October, I'm going to be applying these specific strategies because I had such a good month so far, right? So this is what I'm going to stick to. And I'm just going to keep getting better, year over year. It's just that's what all this data here is for. Let's see, question from Nick. Nick's asking, are these mentoring sessions posted to the Discord or YouTube afterwards? Yeah, they are. So right now we're actually live streaming to YouTube. So I know you're here on the Zoom, but it's actually live streaming to YouTube. So if you ever want to go back and review any of these mentoring sessions, just go to the YouTube channel or the Discord. It's up to you wherever you want to go. If you go over here to live mentoring sessions, it's going to have all the mentoring sessions right here. So if you click on this will give you a playlist to all of the mentoring sessions. And you can see over here that I have about 200 mentoring sessions here. So if you want to go back and review any of these, I've been doing these mentoring sessions every week for, I think like 5 years now. It's been a while. So there's years and years of mentoring sessions here. And you can see how the sessions, like how the markets change and all that stuff. But yeah, if you ever want to go back and rewatch, like say, for example, I have a session next week and you miss it, you can go back here and it'll be available to you for replay. And if you want to rewatch this one in the future, you can do that as well. And same goes with the live sessions. I don't know why sorry guys, give me a second. I don't know why the thumbnail hasn't updated, but it's okay, whatever. It'll update later. But yeah, so that's pretty much it with the High Low Scalp V2. As you guys can see, it's a very simple strategy. If there's any other questions regarding this, guys, feel free to pop in the chat. I'm here to help you guys out. Let me see if there's another example over here. I think there should be one more for the High Low Scalp V2. Okay, so I'm looking right here, not this level. Okay, perfect. So there's a level right here. So let me show you guys one more example of the high-low scalp V2. This is one of my favorite strategies. I think this strategy is really, it's gonna last a while because the strategy is good, like in pretty much all market conditions. Even like with these ranging markets, it still hits pretty solid. So again, right here, guys, confirm the trend. It's bullish right here. Step 2, confirm price break and close past the high-low. This one right here, broken close past it. Step 4, you want to confirm the fake out. Fake out happened right there. Same situation, you're going to set this up right here for the entry, just a pending buy stop. So when price swings up, it's going to fill your order. And then again, you set it to 30-30. Got everything lined up right there. As soon as price fills, you're going to be in the position. So right here, price slightly touches it. It fills the entry. You're now in the trade. And then eventually right there within the next couple minutes, it goes straight to TP with no drawdown. So, I mean, it's a pretty good strategy. You can see this entry came up even later. It came up at 10:18. I'm usually done trading at this time, but if you guys wanted to trade, you guys would have had that opportunity to trade if you guys wanted to keep going. And this is why it's important that you guys have the indicators, because I know some of you guys can't trade between 6:30 and 8, but if you guys can trade after or like any other time of the day, these strategies work on pretty much anything. It's not just US 30. It's basically anything that has volatility. So, I mean, even if you wanted to trade gold, one question that I had the other day was like, some people in the group like to trade gold. If you wanted to apply the same exact strategy that we just did, like say, for example, for gold, like, let me see, I think there's like, I mean, gold's been kind of messy. Gold might be a bad example for like, but here's one right here. So same situation. This entry came up at like, okay, for this is gold. It's the same thing if you trade XAU. It's the same thing. This is just the gold future. So you can see price broken close past the structure. Price was bearish. Price kind of pulls back up right here. So price broke 1, 2, 3, 4. This right here pulled up. Now you can set your pending order right here. The only difference is your TP stop loss is going to change. It's not going to be 30-30. It's probably going to be closer to like, I mean, honestly, I don't even know because I don't trade gold, so I wouldn't know. I mean, if you want to do 7-7, whatever the chart gives you. Sometimes if you guys don't know what your TP stop loss is, I would just put the, that's kind of too far. I wouldn't do that. So I kind of zoom in a little bit. Just set your plot right there. And then it'll usually give you whatever the range is or the ATRs at the time. So 7-7 looks like it'd be a good number. You can see price pulls up, goes back up right there. You just wait for it to come back down and fill your order. But when it filled it right there, you would have been active, straight to your TP. So again, I don't trade gold, so I don't know what the TP stop loss should be, but that's something that you should probably know if that's something that you trade. But yeah, I just wanted to show you guys that it works on different assets. It's not just for US 30. My strategies work for pretty much whatever you want to trade. Let's see. Yeah, Nick said I watched one prior to this live, one from like 4 years ago. Super cool to see the progress. It makes me excited for my own progression in the future when I'm ready to execute trades. Yeah, exactly, Nick. That's the whole reason I did it. So like, I've been recording my live sessions for over 5 years now. And you guys can see the progression. I've always been pretty consistent. The only difference is I just got better. So if you guys looked at my live sessions from, say, for example, if you looked at my live sessions from like, say, 2020, I probably didn't look or sound as confident as I do today. But that, the confidence came with so many live trading sessions, right? So like if you go back super far, you can literally go back to like when I first started recording. Like I wasn't always good at recording live because it's always nerve-wracking. If you're trading live in front of people, you're always worried that you're gonna make a mistake and you're gonna mess up and lose the trade, right? For me now, I know that I'm so good at like trading US 30 that I'm never scared to like be on these live sessions. So yeah, you guys can go back. I have live sessions all the way back until like, I don't know, probably like 2000, like early 2020s. So I got a ton of live sessions here, live sessions and mentoring sessions. Yeah, let's see. William said that reminds me Are the mentoring sessions where you're one-on-one? Yeah, they're on there too, William. So if you go back, they're all on there. If you go over here, well, if you just go back to the mentoring sessions, the ones with the orange background are, I mean, they're not all on here, but yeah, if you go back pretty far in the mentoring sessions, before I did the weekly mentoring sessions, there's a lot of one-on-ones here. So you just got to go you got to go far back. So there's like 200 videos here. So if you go far enough, you'll find the one-on-one sessions with certain people. No, definitely, Galaxy. Valentin said K2 rules. Yeah, Valentin's been here for a long time too. A lot of you guys have been here from the beginning. And a lot of you guys have made a lot of progress since then. So, all right, let me see. Let me go back to our agenda for today. So we cover the High Low Scalp V2. One thing that Maddie wanted to cover was so Maddie basically wanted me to cover, the difference between sideways markets and trending markets. And I guess we can take a quick look at it. It's going to be hard for us to look at here because the market's always kind of different. It's not really moving kind of smooth, but I mean, it's pretty self-explanatory when you guys are looking at a sideways market. Again, if you guys have my indicators, this is going to help a lot with identifying sideways markets and trending markets. I'll use a clean chart over here. It's a lot easier to see. But you guys can see how price is going sideways right here. If you guys are ever confused and you're not sure if the market's actually going sideways or if it's trending, what you want to do is you want to turn the high-low indicator. You want to basically focus on just the higher highs and the lower lows. So we'll use like this area right here as an example. This is like where market close. So what you want to do is you just want to draw a zone around all of the higher highs. It doesn't have to be all of them either. It could just be like whatever the two closest ones are. And then you want to draw a zone at the closest lower lows, right? You turn the indicator off. You can see from here up until here, price is pretty much going sideways, right? This is a completely sideways market, right? That's why I created this indicator to help you guys identify market structure. So pretty simple right there. This is a sideways market. We can go back even a little further. If you can do the same thing over here too. So see how there's a higher high? You would draw your zone from there. And then the same thing right here. You draw your zone from down here. You turn that off. I mean, even if you wanted to draw both, you could have both on here. You could have that there. Have that there. So you can see, for example, here, this is a sideways market. When price is going from zone to zone, sideways market, right? Price pulls it below, sideways market. Same with this right here. Price was sideways, slightly broke above to this area, and it just went back to being sideways. So these are examples of sideways markets. Going back to, say, right here. So again, if you want to draw your zones, just like I did earlier, let's see. You have your zone right here. This is obviously a sideways market, right? Then I'll draw this right here. Okay, so this is actually a pretty good example. So you can see over here that price was going sideways, right? So this is a sideways market, and price will sometimes break out of it and it'll start trending. Right? So this is a sideways market down here. This is a trending market right here. What you want to focus on is really trading around this area right here. Because if you guys remember our examples from the high-low scalp V2 and the momentum pullback scalp, they actually happen right here in between this area. They didn't happen down here. They happen right here. And that's pretty much where they came up. So, whenever you guys are trading, you typically want to avoid this type of market. The reason for this is because there's a lot of manipulation, right? You can get You can either get lucky or you can get unlucky. Price will either, go in your direction or it'll go complete opposite. Like, for example, you can take a sell here or a fake out might happen and price might go straight up. And then, for example, you might take a buy right here. You think price is going to break structure and then it'll just come right back down. So typically you guys want to avoid ranging markets like this. And you want to stick to trading markets like this. I'm sure this will happen a lot more often. I'm not used to seeing ranging markets in the fall so often, but it's a different type of market and we're just adapting to the market as things change. But it's going to be a matter of time until the market starts to move directional again. It can't range forever. It's gonna start moving at some point. Scrolling up real quick. Okay, so I think that's it for that right there. Okay, so the last part right here. Here is Maria's question. She's asking if we can compare the triple confluence versus the pivot scalp and the intraday scalp. So this is going to be the last topic, guys. If there's any other questions that you guys have, feel free to put them in the chat. I'm here to help you guys out. So whatever you guys need help with, this is really your time to get that one-on-one help from me. Because I'm here to help you guys out. But the thing is, I don't really like to teach as much anymore. I've just gotten very comfortable with just making a lot of profit from just trading. And then mentoring is just tough. It's tough when you mentor. And I'm sure if you guys ever try to teach anybody something and it becomes repetitive, it does become kind of it becomes a stale subject. And I love to trade. I just don't like teaching very much as I used to. I'll probably want to teach again at some point. Sometimes I get bored and I want to teach people. So I'm thinking next year, I'm probably going to set up a group where I'll just really like dial in with maybe 6 people for maybe a month or a couple months. And I'll just get you guys up to speed, make sure that you guys are killing it. And then we'll just keep transitioning. We'll just have different groups. So I think that'll help me better versus teaching people one-on-one, because one-on-one is kind of difficult. I hate when I have to teach somebody and then they give up in a few months and it's kind of just a waste of time for both of us. So yeah, let's go to this last topic right here and then we'll go from there. So Maria was asking the difference between a triple confluence, and I'll put the criteria up here. So here's the triple confluence. Who's asking about the pivot scalp. And the intraday scalp. Okay, so you can see that the criteria changes dramatically, right? Triple confluence is basically 3 different strategies. So obviously this one's going to be very different compared to the pivot scalp and the intraday momentum strategy. For the triple confluence, so here's the main difference, Maria. The main difference is that you're going to be applying another strategy, which is the high-low scalp. So you're looking for momentum, so this is where they all kind of tie together. They all use momentum, right? Majority of the strategies that we use momentum. So they all kind of tie together with regard to momentum. So for the triple confluence, we'll go over the steps. So for step 1, you want to confirm the overall bias. For the pivot scalp, you want to confirm the overall bias. For intraday scalp, you don't confirm any bias. You're just looking for the pivot, or you're looking for the momentum to match the trend meter. That's the main difference. So looking at this here, main difference for triple confluence and pivot scalp is that they require overall bias. For the intraday scalp, this doesn't require overall bias, but it would be a good confluence to have if you want to take a quality entry, right? Which typically you do. Where they all kind of line up is that they all use the momentum signal. So you look at step 2 here, confirm valid momentum signal. Look at step 2 here, confirm valid momentum signal. Look at step 1 here at intraday scalp, confirm valid momentum signal. The thing with the triple confluence, so I think this is where you might get a little confused, Maria, because these 2 strategies are in the triple confluence. So you basically have these 2 strategies together. And then on top of that, you're adding the high-low scalp, right? I'm sure you know that by now. And I think you just want a refresher, but it's basically these 3 strategies in one. I just pretty much made them, I just simplified it. So you're basically looking at all these 3 strategies as a triple confluence. So Is there anything specific that you're confused about, Maria? Because I want to dial in if you're like, if there's something specific, because it's what it really is just three strategies. So obviously they're going to be different. The only difference is the pivot scalp uses the pivots, the intraday scalp uses the trend meter. So the only difference here is that you add the high low. Okay, so you're confused with the overall bias. So where's the confusion with that? So I can because I want to make sure that you understand. I don't want to just. Gotcha. Okay, so Maria said, I believe the three of them need it. Yeah, so you don't necessarily need it for the. So I'm not sure if you apply this when this used to be the only strategy. So for whoever has been here the longest, this used to be the only strategy that we had, and it was also applied on the higher time frame. So if you guys have been with, with a group from like, I don't know, from like 2017, this was like the only strategy that we were applying. However, we were applying this on like the 1 hour and the 4 hour. So when you're trading on that high of a time frame, you don't need an overall bias, right? Because that trade's going to run for a long period of time. So the only difference here is that if you're applying the original application of the strategy, you wouldn't need the overall bias. But since we're trading on the 1 minute now, you kind of want to confirm the overall bias because the bias is necessary, right? Because you want to know where price is going at that very point in time. The higher time frames doesn't really matter as much because price will go sideways for like a couple hours and then eventually it'll move in the direction of the trend. So yeah, it's not required on this one, Maria, but you obviously want to use it. Basically, for any 1 minute strategy, you want to have an overall bias because the market's changing, right? It's always changing every couple hours on the 1 minute. So you definitely want to have an overall bias. But yeah, is there anything else specific that you were confused about? Because if you're confused about anything here, I want to make sure that you understand it. But if that's the main thing that you were confused about, then yeah, you should use the overall bias, but it's not necessary for the intraday scalp. And I wouldn't even apply the intraday scalp anymore. I would use the yeah, sure. So you want to see an example of each one. Okay, so let's start off with the first one. Well, let's start off with the simplest one, which is the intraday scalp, because we'll go from easy to more complicated, because I think that's where it'll make a lot more sense to you. Okay, so let's start with, let's just go over here. This is the first example I can see. So if you're applying the intraday scalp, this is the simplest of simplest strategies. Like literally, you just know you have to be able to see colors. If you can't see colors, then this strategy is going to be difficult for you. But I'm pretty sure majority of people here can see colors, right? I remember in the past there was someone in our group who was colorblind, and I feel kind of bad because I kind of said this. I said the same thing that I just told you guys right now, and he said, "I know, but I'm colorblind," and I didn't believe him because I don't know anybody that's actually colorblind. And he really couldn't see the colors. So I told him like the main thing that he could do was to just change the colors of the momentum signals. Right now, the red and green, I'm not sure how colorblind people see, but for the most part, you would just need to see the colors here. So for the intraday scalp, you're confirming momentum matches trend meter, right? That's literally it. So green and green, you have that set up right there. You take the trade. You take the trade there. TP stop loss is set to 1030. Let the trade run, full TP. But here's another example right here. This is why I don't really recommend taking this, or why you should be having a overall bias, because you can see that a lot of entries come up. And actually, this wouldn't be a 1030. This would have to be like a 1-to-1, because this specific strategy, you would and if you did it the same way we used to do it back like way back then, typically what you would do is you would like zoom out. You would set up your TP stop loss right there. Oops, you would zoom out, use your TP stop loss right there, and then you'd have this set up for a 1-to-1. So this would be your 1-to-1 right there. And obviously it doesn't work because this way of applying it was applied during, again, you'd have to apply it on the higher time frame. If you're doing this on like say the 30-minute, 1 hour, 4 hour, it'd make more sense because you'd be able to identify what the ATR is. ATR here doesn't make sense because it's so short term. So you have to use a fixed TP stop loss. So if you're doing the 1 minute, you would typically do a 1030. That's what we've been doing for US 30, right? So, or you would turn on the ATR and you would base it off what the closest number is. So for example, here it's like 14. If you wanted to do a 1-to-1, you just round it up to 15-15. You let the trade run, full TP right there, right? But again, this isn't like a high quality strategy. That's why nobody applies this. This is a good strategy on the higher time frames, but not necessarily on the lower. So you can see right here, there's another entry. You do the same thing. This one here obviously would have been a loss. And at that point, it becomes a numbers game because you have to keep looking for opportunity. There's another one right here. ATR for this was 17. So you can see the strategy here becomes a numbers game because you just pretty much look for as many entries as possible and you would take this, right? So again, right here, ATR at this point is 17.17. And there goes an example of the intraday scalp. It's a very simple strategy. It's profitable. I mean, it's profitable if you're doing a 1-to-1. You'd have to do a 1-to-1 on this. It wouldn't make sense to do this negative risk reward because this strategy it's not a quality type strategy. This is more of a volume type strategy on the 1 minute because there's so many entries that come up, but they're not like something where you can really determine, what's going to be quality and what's not, because there's only 2 requirements. It's impossible to make this quality, right? Like if you want it quality, you have to enter more criteria. So in that point, if you want something quality, you'd apply something like the triple confluence, because the triple confluence has so many more requirements to it. So there's not going to be so many entries. When the entries do come up, they're going to be quality versus quantity here. So there goes an example of the intraday scalp strategy. Here's another one. So now you want to look at the pivot scalp, right? The second easier one. So looking over here at the pivot scalp, the main difference here is that you're no longer using the trend meter. You're now using the pivots, right? You're using the pivots and you're confirming the overall bias. I can't confirm what the overall bias here is because obviously there's just no way for me to confirm it. This happened at like 9:30, but we're just going to assume that it was bullish for this specific entry here. So confirm overall bias. We're just going to say it's bullish. You want to confirm the valid momentum signal. There's a valid momentum signal right here. Third, you want to confirm that price is either below or above the pivots. You can see here that price is above the pivots. So with that said, you enter this trade here for a buy with a 1030 split. It's pretty much the same entry. It's just a different strategy. Same thing right there, full TP. So there goes an example. Yeah, the trend meter is not needed in this one, Maria. So whenever you look at the criteria, just look at the criteria there. Since it says there's no trend meter, right? That's why it's called a pivot scalp. The intraday scalp is because you're using the trend meter. That doesn't use the pivots. The pivot scalp uses the pivots, not the trend meter. So they're using the same criteria because you're looking for the trend, but one is using pivots, one is using trend meter. That's the difference between the two. So that's pretty much the difference between those two specific strategies. That's why so let me put the triple confluence up again. That's why the triple confluence here is the superior strategy, because it uses both, right? Use pivots and use a trend meter. So that's the difference between this and these two strategies. That's why it's called a triple confluence, because it's 3 strategies. It's not just one, it's not just 2, it's 3 strategies in one. So there goes an example of the pivot scalp. And let me see if I can find an example of a triple confluence. The triple confluence doesn't come up very often. It's yeah, I don't see any here. Yeah, I mean, there was none that came up today. Nope. Nope. All right, so I mean, there's no triple confluence from today. Let me see if there's one from last week. Let's go to like Friday. This strategy doesn't come up very often, but I mean, when it does come up, it's pretty decent. Nothing there. This was close, but nothing there either. Okay, so here's an example right here. Like I mentioned, it doesn't come up very often, but when it does come up, it's usually pretty quality. So now let's take a look at the triple confluence. Triple confluence is right here. So first you want to confirm the overall bias. Again, I can't confirm it because this has happened on Friday and I don't have the data from that specific time period. This happened at 10 o'clock. I only knew the bias between like 6:30 and 8. So we're going to assume that it's bearish here. I mean, you could pretty much just take a bird's eye view. It was pretty much bearish all day. So I'm assuming the trend was bearish. It just wouldn't make sense for it not to be because price was bearish since like market open. So confirm overall bias, retail sentiment. I'm assuming it's bearish. We're just going to say it was bearish here. Confirm valid momentum signal. There's a valid momentum signal right here. Third, confirm signal matches trend meter. Trend meter down below is red. Fourth, confirm price is above or below for a buy, below for a sell. Price is below the pivots here. Fifth, confirm price is breaking and closing past a K2 high low. There's a high low right there. Price is breaking past it. Step 6, enter on the open of the following candle. So as soon as this candle closes, you'd enter a short position for a sell. Once you have that set up right there, you let the trade run and full TP right there. So there goes an example of a triple confluence. I mean, I'll see if I can find another one here, but like I mentioned, they don't come up very often. So they're like these entries come up like maybe once every couple days. Because there's like so much criteria that lines up with it where it just doesn't really. I think the main thing is because you're looking for a momentum signal to break and close past structure. And that usually doesn't happen because the momentum will typically happen before and then it'll follow through later. So yeah, because you'll see here, like sometimes you'll get a momentum signal. Like, okay, so like say for example, right here, let me just go over here real quick. So I'll go to this momentum signal and then I'll draw structure right here. Right. So you get a momentum signal right here. It typically comes up early. And then eventually it continues climbing down and then it finally breaks below. Yeah, like right there. So you're not going to see these too often, but when they do come up, they're usually pretty good. But all right, so I think that might be all the questions for today, guys. If you guys have any other questions, put them in the chat. Maria, if there's anything else that you're confused with, feel free to let me know. I'm here to help you guys out. So whatever there's any questions or any concerns or anything that you guys want change or anything that you guys, need any help with, just let me know because the only way for you guys to get better is to get help. And I'm here to help you guys out. I just need you to come forward and ask these questions. So I think that's about it. So, all right, guys, we've been on this session for about 2 hours now. I think we answered all the questions that came in. If there's anything else that you guys need help with, always feel free to reach out. I'll try to have these mentoring sessions more often. I know we kind of like leaned off on them a little bit because I'm not really mentoring anymore. But I'll definitely try to make this happen a little more often. I like doing this myself too, because this kind of helps me go back and review the old strategy. So I'm glad that you brought this up, Maria, because I didn't even remember how like some of these strategies work, right? Like for example, today during the live session, I almost forgot how the momentum pullback scalp was applied because I've been so focused on different strategies. But I'm glad that you guys bring back these older questions, and it just kind of gives me more ideas. So now that I'm looking back at these old strategies, I'm going to see what changes I can make to make them better moving forward so that we can keep applying them and make more profit from these specific entries. So, all right, guys, other than that, we're going to wrap this up. If you have questions, feel free to reach out. Otherwise, I'll see you guys back here tomorrow.